Good day, ladies and gentlemen. Welcome to the Dhampur Bio Organics Limited Q4 FY24 and FY24 result conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the management's opening remarks. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Naveen Agrawal, Head, Institutional Equities. Thank you, and over to you, sir.
Good afternoon, ladies and gentlemen. It's my pleasure to welcome you on behalf of Dhampur Bio Organics Limited and SKP Securities to this financial results conference call. We have with us Mr. Gautam Goyal, Managing Director, and Mr. Nalan Gupta, CFO. We'll have the opening remarks from Mr. Goyal followed by a Q&A session. Thank you, and over to you, Gautam.
Thank you, Naveen. Good afternoon, everyone, and thank you for joining us on this earnings call to discuss the operational and financial performance for the quarter and full year ended 31st March 2024. The company's results and investor presentations have already been uploaded on the stock exchanges and the company's website. The sugar season 23-24 has perhaps been the most volatile year in over a decade. You would recall multiple reports and trade organizations had penned down a substantial reduction of about 20 to 30% from the previous season in the Maharashtra and Karnataka regions, and they had projected Uttar Pradesh to crush similar to marginally higher cane as compared to the previous year. The gross sugar estimates for Maharashtra ranged from 8 to 9 million metric tons and 4 million tons for Karnataka. UP was projected to produce about 12 million tons of gross sugar production, and the country's gross sugar production was estimated to be around 30 million tons. These same bodies had further projected a further drop in Maharashtra and Karnataka for 24-25 sugar season, and some were even predicting a need for imports in 25. This perceived potential shortage resulted in the government's decision to restrict the diversion of sugar to ethanol to 1.7 million metric tons. The final sugar numbers gave a completely different picture. The gross sugar production in Maharashtra and Karnataka is estimated to be 11.5 million tons and 5.5 million tons respectively, and UP's gross sugar production should be around 11.2 million metric tons. The country's gross sugar production is estimated to be just over 34 million metric tons, and the net sugar production will cross 32 million metric tons. ISMA has projected a net diversion of about 2.2 million metric tons into ethanol, and the sugar consumption is estimated to be in the region of 28.5 to 29 million metric tons. And the closing stock would be a comfortable 8.5 to 9 million metric tons. This increased sugar production, coupled with pre-monsoon showers in the western region, along with the projected transition of El Nino to La Nina, will ensure adequate cane availability going forward. We are therefore confident of the restoration of the policy to encourage diversion of sugar towards ethanol. The sugar prices in North are hovering around 39 rupees a kg and 36 rupees a kg in the western part of the country. With the increased cost of production, which includes the already announced FRP of rupees 340 for the sugar season 24-25, ISMA has requested for a commensurate increase in the minimum selling price of sugar, which has remained unchanged at 31 rupees a kg since 2018-19. Let me now give a brief synopsis of the international markets, which continued their decline due to the improved supplies from all major producers like Brazil, Thailand, and adequate domestic availability in India. The projected deficit is expected to turn surplus in 2024-25. The markets from the high of 28 cents have recently dropped to 19.10 cents on the May NY11, number 11, a drop of over 30%. Ethanol parities at 14.5 cents. Ethanol parities are still at 14.5 cents, which means sugar at the current level This ratio favors a diversion to further sugar production and could potentially make the international prices go down even further. The Brazilian crush started on time, and the mix is estimated to be 52% in favor of sugar, and the total sugar production is expected to be around 42 million tons in this season. Thai crop numbers have also improved, with the overall sugar production of 8.8 billion metric tons, up from their initial estimate of 8 million metric tons. For the next year, the crop is expected to further improve with an estimated production of about 11 million metric tons. EU crop is expected to be the same as last year, but due to excess imports from Ukraine, there is stress building up and we may see up to 2 million tons of exports from EU to the world markets. Pakistan too is expected to allow 300,000 metric tons of sugar exports, and the notification could be expected any time. Most of these sugars will find home in the region, like Afghanistan and other sort of neighboring countries. Out of the total ethanol requirement of 825 crore liters, the OMCs have finalized 320.53 crore liters for the ethanol supply for the year 2023-24, which is basically from November to October. Against the set contracts, 234.74 crore liters has already been supplied, with the sugar sector supplying 130.47 crore liters and the balance 104.27 crore liters has been supplied by the grain sector. The current blending percentage is 11.98%. In the sugar year 2023-24, the C-heavy derived ethanol prices have increased from 49.41 rupees per liter to 56.28 rupees per liter. And so far, the price for B-heavy and syrup-based ethanol remains unchanged to 60.73 and 65.73 rupees per liter respectively. While the maize-derived ethanol prices have been increased from 66.07 rupees a liter to 71.86 rupees per liter. The price of ethanol from broken rice remains unchanged at 64 rupees a liter. We believe we were nimble enough to navigate this volatile year, and our decision to defer the greenfield distillery in Meerganj has been further vindicated. We remain on target to convert part of our distillation capacity to handle dual feedstock and believe this will enhance our ability to mitigate risk and increase profitability. We saw a sharp decrease in revenues primarily due to lower sales of sugar and ethanol. The sugar sale was reduced due to a ban on sugar exports and lower sugar quotas. We sold 29.68 lakh quintals this year as against 38.3 lakh quintals in the domestic market, and our exported quantities of 0.68 lakh quintals as compared to 6.98 lakh quintals during the previous years. Our ethanol sales too saw a reduction to 7.95 crore liters this year as compared to 8.75 crore liters last year. Nalin will elaborate in greater details about the breakup during his presentation. Our continuous cane development efforts resulted in improved gross recoveries. Our gross recovery stood at 11.37% this year as compared to 11.01% last year. This improvement of 0.36% in our recovery, coupled with higher bagasse savings, we were able to considerably mitigate the increase in cost brought about by the 20 rupees a quintal hike in the SAP in UP. Our cane development efforts also helped in minimizing our reduction in cane crush to about 10% as compared to our peers in our operating areas. These measures have resulted in an overall increase in our margins. We believed our increased closing stock of sugar of 26.95 lakh quintals as compared to 14.71 lakh quintals, along with better margins, will give us sustained profitability going forward. Our country liquor sale volume in our spirits segment had an impressive growth of about 115%. Our sale volume stood at 2.54 million cases as compared to 1.16 million cases last year. I now invite Nalin, our CFO, to give a deep dive into the financial and key operating numbers. Thank you.
Thank you, Gautam, and good afternoon, everyone. I'll begin with the standalone financial highlights for Q4 and full year for this financial year ended 31st March 24, followed by the segmental highlights. Revenue for Q4 FY24 stood at rupees 594.62 crores as against 917.48 crores in Q4 FY23. EBITDA for Q4 FY24 stood at 87.06 crores as against 115.61 crores in the corresponding quarter of the previous year. EBITDA stood at 161.3 crores for this financial year as against 212.9 crores in FY23. EBITDA margin for the quarter was at 14.64% as against 12.60% in Q4 FY23. Profit after tax stood at 41.22 crores as compared to 81.95 in the same period last year. Profit after tax margin for the quarter was at 6.93% versus 8.93% in Q4 FY23. We recorded a revenue of 2,061.16 crores in FY24 as against 2,648.6 crores in the previous year. Revenue includes 530 crores of excise on country liquor as compared to 247 crores of excise last year. So the net of excise turnover stood at 1,831 crores as compared to 2,402 crores last year, down by 24%. EBITDA for FY24 was at 161.6 crores as against 212.91 crores in FY23. EBITDA margin was at 6.84% as against 8.04% in FY23. Adjusted EBITDA margin stood at 6.98% in FY24 after adjusting for one-off levy expense and one-time income from sale of our premises. Profit after tax stood at 48.82 crores against 112.02 crores last year. Moving on to the segmental highlights, beginning with the sugar segment. Revenue in the sugar segment was at 437.98 crores in Q4 FY24 as against 107.88 crores in FY23. Sugar segment's contribution in revenue was at 64% as compared to 74% in the same quarter last year. Segmental EBIT was at 67.69 crores in this quarter as against 86.35 crores. EBIT margins for this segment were at 15.46 as against 10.69% in Q4 FY23. Sugar revenue was at 1,590 crores in FY24 as against 2,252 crores in FY23. Segmental EBIT was at 79.41 crores in this fiscal as against 101.7 crores in the previous financial year. EBIT margin for the financial year for this segment were at 4.99% as against 4.52% in FY23. We crushed 41.44 lakh tons of cane during FY24 as against 43.22 lakh tons in last year. Sugar production in FY22 stood at 4.23 lakh tons as against 3.51 lakh tons in FY23. We diverted 42,980 tons of sugar as compared to 59,000 tons of sugar towards B-heavy dried ethanol. We have diverted sugar cane of 31,150 tons of sugar cane towards sugar juice dried ethanol in FY24 as against 59,888 tons in FY23. Our cane recovery efforts have paid off as net recovery for the quarter came to 10.3% as against 9.4% in FY23. We sold 79,820 tons of sugar in Q4 FY24 as compared to 84,330 tons in Q4 FY23. We sold 3.03 lakh tons of sugar against 4.53 lakh tons including exports of 69,870 tons in the previous year. These sugar quantities are for the financial year. Average sugar realization stood at 38,350 per ton against 36,684 per ton in FY23. Sugar inventory as on 31st March 24 stood at 2.69 lakh tons of sugar, which has been valued at 34.75 per ton. Sugar inventory as on March 24 included white sugar of 2.1 lakh tons and 0.5 lakh tons of raw sugar. White sugar has been valued at 35.167 per ton. Sugar inventory stood at 1.47 lakh tons which was valued at 33,929 per ton as on 31st March 23. It is pertinent to note that increase in sugar cane price has been partly offset by our better recovery. We generated 302.5 million units of power in FY24 as against 345.31 million units in the last year. We exported 96.81 million units at an average realization of 3.44 per unit in FY24 as compared to 146.73 million units at an average realization of 3.3 per unit in FY23. We also sold 2.13 lakh tons of bagasse for an amount of 49 crores in FY24 as against 1.51 lakh tons of bagasse for an amount of 51 crores in FY23. Now moving to our biofuel and spirit segment. This segment reported a revenue of 98.5 crores in this quarter as against 151.98 crores in Q4 FY23. Segmental EBIT was at 16.28 crores with an EBIT margin of 16.53. Biofuel segment contributed 14% of the revenue, almost same as Q4 23. Full year revenue for the fuel segment, biofuels segment was at 521.36 crores as against 563.76 crores in FY23. Segmental EBIT was at 56.44 crores as against 108.9 crores in FY23. EBIT margin was at 10.83% in FY24 as against 19.32% in FY23. We produced 93.14 million bulk liters of ethanol in this year, out of which 84.39 million bulk liters was derived from B-heavy, 3.5 million bulk liters was from syrup, while the remaining was from the C-heavy. In FY23, ethanol production stood at 98.06 million BL, with 51.31 million BL was from B-heavy and 46.7 million BL was derived from syrup. Ethanol sales were at 82.68 million bulk liters of ethanol at an average realization of 58.81 per BL in FY24, as against 88.52 million BL of ethanol sales at an average realization of 60.83 per BL in FY23. Out of total sales, 74.34 million BL were from B-heavy at an average realization of 60.02 per BL against 46.72 million BL at an average realization of 58.74 per BL last year. Sugar syrup derived ethanol sales stood at 5.22 million bulk liters in FY24, which was primarily done in Q1, against 40.8 million BL in FY23, as there was no diversion of sugarcane towards ethanol in current season. ENA sale stood at 11.1 million bulk liters, including outside sale of 3.1 million in FY24 as compared to 5.2 million bulk liters, including outside 1 million sale of ENA. Ethanol stock as on 31st March 24 stood at 7.74 million bulk liters of ethanol as against 5.54 million bulk liters as on 31st March 23. Coming to the country liquor segment, we reported a revenue of 147.67 crores in Q4 FY24 as against 131.47 crores in Q4 FY23. Segmental EBIT stood at 2.18 crores as against 33 lakhs in same quarter last year. EBIT margin stood at 1.48% in Q4 FY24, as against 0.25% in the corresponding quarter of the last year. EBIT margin based on the revenue net of excise stood at 13.6% in Q4 FY23, as against 2.41% in the corresponding quarter last year. Full year revenue for the country liquor segment was at 594.37 crores, as against 275.63 crores in FY23. Segmental EBIT for the full year stood at 9.48 crores, as against 1.31 crores in last year. EBIT margin stood at 1.59% in FY24, as against 0.48% in FY23. EBIT margin based on revenue net of excise for the full year is 14.7%, as against 4.5% in FY23. We sold 25.04 lakh cases of country liquor in this year, as against 11.62 lakh cases in FY23. Average realization was at 281.51 net of excise per case, as against 250.14 per case in FY23. Coming to our debt position, working capital utilization has been higher as compared to previous year on account of higher inventory. Net fund-based working capital utilization as on 31st March 24 stood at 804 crores, as against 460 crores as on 31st March 23. Long-term loan as on 31st March 24 stood at 241.44 crores, against 246.32 crores as on 31st March 23. We paid long-term loans of 78.28 crores in this year and availed fresh-term loans of 72.33 crores for the capexes. During next year, we don't foresee major capexes except for the capex for annual maintenance and part conversion of existing distillery into grain-based distillery. Company continues to be rated at A+ by the CARE. With that, I would request the moderator to open the floor for the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take a first question from the line of Sanjeev Damani from SKD Consulting. Please go ahead.
Namaskar. Am I audible, sir?
Yes, Mr.
Sanjeev ji. Namaskar ji.
Sir, my first question is that how much cane was crushed in the last season, that is 22-23, as against in this year up to March, and hereafter also are we running all our mills or some of the mills have closed down? This I would like to understand first, sir. Thank you.
So, Mr. Damani, last year during this season, we crushed 42.7 lakh quintals of cane.
Yes, sir. Yes, sir.
Last year हम लोगों ने 42.7 मतलब 4 करोड़ 27 लाख 4 करोड़ 27 lakh और 42.7 lakh tons of cane is what we crushed last year. Last financial year. Last sugar season, no?
Last sugar season
we crushed 42.7 lakh tons of cane. This sugar season we should be crushing about little less than 38.5 lakh tons of cane. For the financial year, the number also will not be much different. I mean, financial year, what is the total cane?
Financial year, we crushed 41.44 in this financial year against 43.22 lakh tons last year.
So 43.22 for the financial year last year, sir, and 41.44 for the financial year this year.
Yes,
for sugar season, 42.7 and 38.3. Roughly 38.5.
No, sir, actually, for sugar season only I wanted the figure. So for the season I am taking it as 42.7, right, last year, and this year 38 only, 38.5 only.
38.5, हाँ जी. And one of आपका जो दूसरा सवाल था सर, हमारी Our Mansurpur unit is still running. We should be probably shutting down operations in the next couple of days.
Now, the rest of the mills are all closed, sir.
Hanji.
Crushing is stopped at all other mills. So now coming to, can you give a small commentary about some extra efficiency that you could generate or extra cane procurement you could do unit-wise? A small commentary on that. I think we have some 3 or 4 locations of sugar mills. So can you make a small commentary on it so that we understand which are the units which are having good availability of cane, had good availability of cane this year, and what are the likely prospects in next season also, sir? And as to some red rot or any other problem is likely to occur, or are we out of that? Because we understood that in some of the area in Western UP, this problem had emerged in certain areas. So kindly give your reply. Thank you.
Sanjay ji, as you correctly mentioned, so let me first give you on the cane. We have our sugar factories. Our 3 basic districts, and the 3 districts are Asmoli is the biggest sugar factory which is in the Sambal district. Our cane reduction in Asmoli last year we had crushed 17.4 lakh tons of cane. This year we will be doing just a little less than 15 lakh tons of cane.
Okay.
14.9 is the cane crush this year in Asmoli. Asmoli saw a 14% cane drop in cane crush.
Right.
In this region, our neighboring factories have seen a cane drop to the tune of anything between, say, 25 to about 30%.
Okay,
Roughly,
sir.
the factories in our neighboring areas or our colleagues have seen about a 25 to 30% cane drop, and our cane drop is been restricted to 14 odd percent. The second factory, Mansurpur, the second biggest factory, Mansurpur, which is in West UP, our cane crush last year was 14.6 lakh tons of cane. This year we should be crushing about 13.7 to 13.7 lakh tons of cane.
Okay,
our
sir.
cane drop here will be just about 5.5 odd percent, which is commensurate with our other colleagues in this area.
Okay.
The third factory, Mirganj, last year we crushed 10.5 lakh tons of cane, and this year we have crushed 93.5 lakh tons of cane, and our cane drop is 11%. Again, over here, the average drop of all our neighboring factories is in the region of 20%.
Okay.
As a group, our average drop is about 11 odd percent, 10.5 to 11%. And in our neighboring areas, in our region, the average drop that we see is amongst all the groups and the peers that we compare ourselves with is about again 17 to 18%.
Okay,
Some of them are higher than 20%. As Nalin and we were mentioning, our net recovery and gross recovery is higher this year. In the financial year, we are higher by a gross recovery before diversion is 0.37% higher during the financial year. And please keep in mind, this is also because most of the factories shut down in the peak recovery area.
Okay.
Peak recovery because they were shut down, so this, in spite of that, the net recovery is higher. We believe if we had a normal season, this recovery could have been 0.45 to 0.5 higher than last year.
Okay.
With regards to red rot, I don't think West UP is completely out of the woods. We are making all-out intensive effort towards containment of red rot, not to allow it to spread, eradication of infected bushes, and replacement of varieties into like CO118, 15023. I do believe our cane development efforts that we have been talking about for the last 2 years, we do believe we are able to get some sort of sustained results because our cane crushing, our recoveries have improved and our crushing drop is not been as drastic. As compared to next year, again, we don't foresee, we are not seeing an excessively high increase in cane acreage.
Okay.
And this is also validated by our colleagues and everybody else in the region. The cane acreage in UP, we are not really seeing any increase. इसके दो बेसिक कारण है, because again during peak planting time a lot of factories are shut down, so there could be lesser availability of seed, but internally